Asian data released today showed that Malaysia's unemployment has come in at a fractionally higher 3.2%, while Taiwan's jobless figure has in fact edged down to 4.18% in September. But in an export-led region where the US dollar is king, how are rumours of a trade disconnect playing out for Asian currencies? Wai Ho Leong of Barclays is on the phone with me now. Wai Ho, while today's figures compare favourably with Europe, for example, in context with the rest of Asia, where does this data place these economies?
Well, I think it's a perfect sign of the North-South Asia divide, where North is actually running a bit faster and South Asia is actually a bit slower. The story is that global growth is stronger, and this is benefiting North Asian economies like Taiwan and Korea, which are more industrialized and export-oriented. Conversely, resource suppliers in South Asia like Malaysia and Indonesia, we need a longer lag before they actually start to benefit. So in the meantime, Taiwan starts to outperform countries in the south like Malaysia.
Market insiders are warning of a lack of competitiveness in Asia, as many of the region's economies are shifting their concentration to domestic demand opposed to an export-led strategy. While this defensive method may be considered the best offense, are Asian economies limiting themselves? Or, as in Malaysia, for example, could this strategy pull Asian economies into recovery?
I think the strategy should benefit these economies, but I think the time horizon is sort of different. This is not cyclical, but over as time passes, as Asian economies grow wealthier, I think it's inevitable that domestic demand has to improve. And this is really the natural order of things. But it doesn't mean that these economies will stop being export-oriented. But I think in a relative sense, domestic demand engines are stronger now in these economies than they were a decade ago. And also creating more jobs in these export-oriented economies than a decade ago.
With discourse regarding a trade disconnect in the market sphere, could we see a cyclical or perhaps even bubble-like relationship between a slowdown in export industries and subsequently businesses and employment, do you think?
Well, not at the moment. Our view is that the export cycle in Asia is actually picking up cyclically. And this means that the export sector is at the moment creating slightly more activity and jobs, particularly, as I mentioned, in North Asia, where they're benefiting from more orders from the rest of the world. And I think this should eventually filter through into domestic demand, which has actually started to reawaken.
And lastly, Wai Ho, the Taiwan dollar was one of the big losers during the US shutdown. While the Malaysian ringgit also experienced some weakness during the impasse, it has received support from a recent currency swap agreement with South Korea. While the US dollar is the export industry's common currency, in your view, what can we expect from the regional currencies in the short, mid and long-term period?
Well, we're actually constructive on economies in Asia and currencies in Asia that are more synchronized with global growth. And obviously this group includes North Asian currencies, the likes of Taiwan and Korea. But not just in North Asia, but also some of the more open economies in the south of Asia, like Malaysia and Singapore, should also start to benefit as global growth picks up and growth momentum improves. Really, I think being more synchronized to the U.S. economy in terms of growth is important because it means that as the U.S. improves, and these are more likely the economies that will be able to match the Fed in terms of rate hikes. And if these economies actually pass on rate hikes earlier than the Fed, you'll get a situation where interest rate differentials actually move in favor of these currencies. So next year looks a bit interesting, and we're looking for some currencies in Asia that I mentioned to perform quite well. Everything is bearish. Yeah.
Wai Ho, many thanks. That's all for now, but I'll be back tomorrow with an insight into some of your favourite trading pairs. So do click back to Dukascopy TV. Goodbye for now.